Welcome to Income from Other Sources Video 1. Income from Other Sources, Section 55 to 57 of the IT Act deals. First introduction. All other incomes which were not covered under the four major heads be covered under tax under this head. This head includes dividend income, interest income, casual incomes like winnings from lotteries, gambling, race winnings, and other undisclosed source of income. Let me see the format. How to compute the taxable income from other sources. First one is dividend receipts. Dividend from foreign companies, dividend from Indian companies, and the dividend from cooperative society were fully taxable, less deduction under section 57(1) interest on loan when the investment was made from the loan fund. That interest on loan can be deducted under section 57(1). Actually, that amount is limited to only 20% of such dividend income. Next, number 2, interest receipts. Interest on government securities. Specified government securities were fully exempted under section 10, subsection 15. Next, interest on less tax securities and interest on non-government listed and non-listed securities. If net grossing up is required, 10% will be the TDS rate. Here we can less deduction under section 57 subsection 2. Interest on loan and any collection charges of interest is there. It is allowed to deduct from this income. Next, rent from letting of house property along with the plant and machinery. It is also called composite lease. Here we can get the deduction under section 57 subsection 2A. Expenses related with house property and the plant and machinery. Next one, casual incomes, winnings from or incomes from betting, gambling, race winnings. If the amount is net, means 30% tax already deducted, but here we have to show the full amount. So grossing up is required, where the grossing up equal to net plus the TDS amount. For the casual income, 30% is the tax TDS amount rate. And any cost of lottery tickets and the loss from card games will be ignored, but the maintenance cost only allowed to adjust with the relevant incomes like winnings from camel races, horse races, etc. That maintenance cost only allowed to adjust with that income. Next, family pension received, less deduction under section 57(4). Actual ceiling is there. Rupees 15,000 ceiling amount or 1/3 of the family pension, whichever is least was allowed as deduction, balance only taxable. Next is royalty receipts by author of books. Here we can claim the deduction under section 57(6), the actual cost of a manuscript or the cost of stationery, balance only taxable. Director's fees, ground rent, examinership remuneration, all part-time remunerations and all other undisclosed incomes were fully taxable under income from other sources. Next one is deemed incomes. That means unexplained deposit in bank account, unexplained expenses of the family functions. These were fully taxable. Next is cash gift from friends. Cash gift which exceeds rupees 50,000 overall was taxable. If the cash gift from friends was not exceed 50,000, it was fully exempted. Next, educational scholarships. Less exemption under section 10(16), fully exempted. So taxable portion will be nil. Next is salary as MLA, MP or MLC, fully taxable only at income from other sources. Next is daily allowance of MLA, MP and MLC, fully exempted under section 10(17). Next, awards and rewards instituted by state or central government. Any award which is approved by the state or central government, it was fully exempted under section 10 subsection 17A. Agriculture income in India also fully exempted under section 10(1). Agriculture income from abroad, fully taxable. Interest on post office saving bank account, less exemption under section 10(15). We can claim up to 3,500 per annum, so balance only taxable. Next one, forfeiture of advance on sale of any capital asset, fully taxable under income from other sources. Income by way of interest received on compensation, fully taxable. Any compensation received in connection with the termination of any contract, also fully taxable. Interest received on delayed refund of income tax, also fully taxable. Insurance commission, fully taxable and income from other sources. Income from subletting of house property, less expenses or payments related to sublet property was allowed as deduction, balance only taxable. Amount received for a consideration less than the market value or the stamp duty value, the difference more than 10% of the sales value which exceeds rupees 50,000 was fully taxable. Interest on unrecognized provident fund also fully taxable, but interest on public provident fund and the statutory provident fund were exempted under section 1015. These are all the incomes covered and income from other sources. Now, important notes. Any gift of immovable property by friends on marriage day is exempted from tax, but any other function, if the stamp duty value exceeds rupees 50,000, fully taxable. Any gift from relatives or spouse on any day is not taxable. Any gift from relatives and family members is not taxable. Allowances to MLA MP are not qualified for exemption under new tax regime. If any immovable property is received without consideration, if the stamp duty value property exceeds 50,000, is fully taxable. Collection charges of dividend from Indian companies be ignored, but collection charges of dividend from foreign companies allowed as deduction under section 57 subsection 1. 10% of income be deducted as TDS on listed and non-listed securities. That means interest income. If the interest income exceeds 10,000, 10% will be deducted as a tax on such interest income. Any interest on the late compensation was fully taxable under income from other sources. Now, we already explained here that interest on government securities were fully exempt under section 1015. What are that fully exempted government securities? Interest on these specified securities were fully exempted under section 1015. The examples of few specified here. Number one, national plan certificate. It may be the 10 years or 12 years certificates. Post office cumulative time deposit or fixed deposit or cash certificates or public account of POSB, and the interest on post office saving bank account is exempt up to 3,500. Special deposit scheme in the year 1981 or fixed deposit government savings certificate and non-resident rupee deposit schemes. Special bonds issued in the year 1991 and 7% capital investment bonds, national defense gold bonds or gold deposit bonds issued in the year 1999, 9% relief bonds, 12 years national saving annuity certificate and treasury saving deposit certificates. These investments interest were fully exempted under section 10 subsection 15. Any tax-free bonds issued by NHAI or ADCO or IRFC and REC and Power Finance Corporation were also fully exempted. NRI bonds issued in 1988 by SBI. These government securities, any interest on these government securities only fully exempted under section 1015. And the following government securities are fully taxable securities, but no tax will be deducted on these securities, but interest on these securities are fully taxable. What are they? Number one, interest on central or state government bonds or securities, interest on state government loans, national defense bond or national development bonds, 7 years national savings certificate, 6.5% gold bonds issued in the 1977 and 7% gold bonds issued in the 1980. Actually, any investment made by the public in these bonds, that interest was fully taxable under income from other sources. Income from undisclosed sources means what? These incomes were fully taxable. Number one is unexplained cash credit, unexplained investment, unexplained money, unexplained expenditure. These were fully taxable. These are also called deemed incomes from other sources. The tax procedure for these deemed incomes will be flat at 85.8%, which includes the tax rate is 60% plus a 25% surcharge plus 4% is cess plus penalty under section 271 AC at the rate of 10%. It comes around 85.8%. Let me see simple problems under income from other sources. Practice 1. Mr. Ganapati submits the following information. Compute taxable income from other sources. Dividend from Unit Trust of India, it was fully taxable. Dividend from Infosys, also fully taxable. Dividend from Tata Motors, Indian company, also fully taxable. Dividend collection charges from Infosys. Actually, Infosys is a multinational company. So the the dividend collection charges from Infosys is only allowed as deduction under section 57(1). Last one is dividend collection charges from Tata Motors. It is an Indian company, so the actual dividend collection charges from Tata Motors will be ignored. So let me see the answer. Computation of taxable income from other sources. Dividend receipts, dividend from UTI, dividend from Infosys, or dividend from Tata Motors are fully taxable, and the collection charges of Infosys only allowed as deduction, balance only taxable. In the same pattern, can practice this exercise 1 and verify the answer. Now let me see practice 2. Compute taxable income from other sources. Interest. Actually, in the first sum, all the incomes were dividend income, but in the second practice, all the incomes were interest income. Please note this. Interest on government securities fully taxable. Interest on fixed deposit also fully taxable. Interest on 7% investment bonds, these were fully exempted under section 1015. Interest on TN government loan fully taxable. Interest on central government loan, any interest on central government loan was not taxable. Only the state government loan only taxable. Okay. In the same pattern, everyone can practice exercise 2 and check up the answer. Now let me see the practice 3. In this sum also belongs only the interest and royalty incomes. Interest on commercial security is fully taxable. Interest on bank deposit also fully taxable. Interest on post office saving bank account lays exemption under section 1015. Up to 3,500 we can claim exemption, balance only taxable. Royalty income 19,500. Here the expenses of the stationery 4,500. We can get the deduction under section 57(6). 4,500 balance only taxable. Next, interest collection charges 1,500. So interest collection charges we can claim the deduction from the interest receipts. So balance only taxable. In the same pattern, the listeners can practice exercise 3 and verify the answer. Now let me see practice 4. Compute taxable income from other sources. Directors' fees, interest on fixed deposit, interest on public post office account. Public post office account we can claim exemption under section 1015 up to 5,000 rupees. But interest on post office saving bank account we can claim only 3,500. For the public post office account we can claim up to 5,000 as an exemption. Please mind it. Next one is lottery winnings. It is a net amount. While computing taxable income from other sources, we have to add the TDS along with this net. So we have to show only the gross amount. So grossing up means adding the TDS amount with the net amount received. In short, net plus the TDS is called gross. You have to show only the gross amount here. Next, unexplained cash deposit in bank account fully taxable. Interest on TN government loan, that's all. It was also fully taxable. Fully taxable. In this answer, let me see the first interest receipts. Interest on fixed deposit fully taxable 12,800. Interest on public post office account out of 8,200 we can claim exemption up to 5,000. Next one is interest on TN government loan. Interest on TN government loan fully taxable. Interest on TN government loan. Fully taxable 10,000 rupees. So the total amount will be 26,000. Next is royal lottery winnings. It was a net amount where for these cash incomes normally 30% will be deducted as a tax. So now we have to grossing up it by 35,000 into 100 by 70, 50,000. Next, director's fee is fully taxable. Unexplained cash deposit also fully taxable. So the total taxable value will be 1,42,000. Okay. Next, in the same pattern, the students can practice exercise 4. The answer will be 1,13,000. 1,300. Okay. Now let we see practice 5. Compute taxable income from other sources. Family pension received 60,000. For family pension, we can claim the deduction less than 57.4. Rupees 15,000 is the ceiling amount, or one third family pension, whichever is the least, was allowed as a deduction. So balance only taxable. Out of 60, 15,000 was exempted, balance only taxable. Agriculture income from Sri Lanka, abroad agriculture income fully taxable. Interest on commercial security, it is a net. When the amount exceeds 10,000, we have to do the grossing up. So for this commercial securities, normally 10% will be the TDS rate. So this amount 18,000 equal to only for 90%. So what for 100%? We have to convert that. That is called grossing up. So interest on commercial securities, 18,000 into 100 by 90, it will be 20,000. Okay. Next. Maintenance cost of horses. Here, the actual race winnings amount is in how much? 24,500 into 100 by 70, 35,000. Here we can adjust the maintenance cost of horses, 15,000. Last one is research fellow from central government scheme. Any central government approved scholarships were fully allowed as deduction. It was not taxable. So central government scheme 75,000. Note, research fellowship scholarship was fully exempt under section 1016. So balance only taxable. In the same pattern, the listeners can practice exercise 5. Now let me go for practice 6. Compute taxable income from other sources. Amount won from lottery, won. It means won, gross amount. No need to grossing up it again. When the amount received means it is a net amount. In that situation only we have to add the TDS on the net amount. Here the amount won, it's a gross amount. It was fully taxable. Next, bettings on horse races. Received, in hand received, it is a net amount. So this 21,000 is equal to only for 70%. We have to convert it into 100. So 30,000. Winnings from card games at Chennai, fully taxable. Loss from card games, any loss from the casual incomes like card games, this and that will be ignored. Purchase of lottery tickets also will be ignored. A full taxable income from other sources will be 92,000 only. Note, loss from card games at Bangalore and purchase of lottery tickets be ignored. Same pattern the listeners can practice exercise 6 for their easy reference. Actually, these are all the simple questions only. Only the stamp duty value not exceed 50,000, so it was not taxable. Okay, this one is required. Now practice 7. Mr. Suresh made the following investments. Here, the actual amount of investment only was given. We have to compute the interest amount by multiplying with the actual investment into concerned interest rate of such securities. 40,000 invested in 8% government securities, 25,000 invested in 6% Chennai municipal bonds, 20,000 invested in 7 years CTD, cumulative time deposit scheme. It was not taxable. And 15,000 5% securities of foreign government. Only out of 4 investment, the third one was fully exempt under section 1015. Other 3, first one is amount invested 40,000, that yield 8% interest. So interest is sits on 8% government securities. We have to compute the amount of interest, 40,000 into 8%. And second one, 6% Chennai municipal bonds. So 25,000, that yield only 6% interest rate, 1,500. Third one was not taxable. Fourth one, 15,000 invested in 5% securities of foreign government. So 50,000 into 5%. That's all. Very simple problem. In the same pattern, the listeners can practice exercise 7. Now let me see practice 8. Mr. Pugar made the following investments. He also made the investments. The amount of investment, 80,000 in 6% TN government loan, 75,000 in 8% listed securities of ABC Limited, 90,000 into 9% government securities. Next is 60,000 invested in 12% securities of PQR Limited, 40,000 invested in 10% Mumbai Corporation bonds. Interest are payable on 30th June December 31st each year. On 1st September, 12% securities of PQR Limited were sold. So interest was paid twice in a year. So at the time of sale of this transaction, in that 12% security of PQR Limited invested 60,000. So in this investment, Mr. Pugar may received interest only for the 6 months. For the next 6 months, the securities was not in his hand. So we have to compute the interest only for 6 months for this bond. And the TN government loan invested in the month of November after the 1st October. So in the TN government loan also, Mr. Pugar can get interest only for the 6 month only, but not for the whole year. So we have to compute the interest only for 6 months on this security. Let me see the answer. Interest receipts on TN government loan only for 6 months because he purchased during only November, December, Jan, Feb, March. Only 5 months only he held that investment during the previous year. So we have to compute only for 6 months. And 8% listed debentures of ABC Limited, 75,000, 8%, 6,000. And 9% government securities. Interest will be 8,100. So total amount will be 24,100 will be the taxable income from other sources. Okay. In the same pattern, the listeners can practice exercise 8 and verify the answer. Okay. We'll see in the next video the comprehensive problems. Okay, bye.